What is going on, everybody, and welcome to another weekly update. And what I like to do in these videos is provide you guys some upcoming earnings, some upcoming events to get you prepared for the week ahead. That sounds like something you're interested in. Consider subscribing, as I do also provide a technical analysis on Sundays, and I do also provide a pulse on the market on X at Hemi137, so you can check me out there as well. But before we get started, remember to hit the like button to feed the algorithms, to get this message out, to get you prepared. So, with that being said, let's dive right into what we got for this next week. Again, a lot of headline news is dropping left and right, and it's actually enforcing a lot of our thesis that we've been talking about to this point. Now, a lot of people, I've talked about a lot of different things over the past year and a half, and people are just like, I'm not seeing it. The market's going to all-time highs. What's going on? When in fact it was just 7 stocks, and we're finding out that a lot of the things that were told to us were lies, and they're being revised. The data is being adjusted, and as you can see on the first line here, we've had another 653,000 fake jobs revised, added to the 818 fake jobs removed from the 2023 data. So the 653,000 was between 2023 and 2024. So we've talked about this multiple times. They are adjusting the data to essentially feed headline news because majority of the people are headline readers. So if the headline reads that we have beat expectations, that things are fine and dandy, that we're in a golden utopic state, that all these things, blah, 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 ultimately, they are feeding this thesis that whatever you're doing and you're working your 2 to 3 full-time jobs, that it is your problem. It's not the rest of the world. It is just you. When in fact, that little tingle you feel like something is off is correct. So again, since the election, I mean, this has been going on even before, just before the election, but since the election itself, you've gotten full blown, whether you want to believe it's conspiracy theory or not, a lot of the stuff is rolling out that it is in fact true. So again, this is why I focus heavily on earnings, on specific data and revisions that will occur. Again, that's not going to affect mainstream media. That's going to not affect the direct market directly. And then ultimately know that you also have the Treasury, who is dumping billions of dollars into bonds to keep our bonds up, as we watch essentially China's bonds fall off of a cliff, and going through complete meltdown mode over the past couple months. And now it's starting to affect Europe. And then within weeks, it will start affecting us. So with that being said, as we continue to feed this thesis, we need to look at the next steps. And a lot of these are going to feed into what is coming up in this earnings cycle. The Bank Term Funding Program has dropped to 4.4 billion since January. What does that exactly mean? That means since we have bank earnings that are occurring on Wednesday, January 15th, you're going to start seeing regional banks implode. Essentially, you had 1,000 banks that were essentially gobbled up by the FDIC with no major headline news. 1,000 banks essentially got bailed out. Taxpayers bailed out these banks. And what is frustrating is that, again, they take your money, they give you pennies on the dollar to use your money to leverage to make them wealthy. And now they're turning around and taking all your money because of their bad, essentially, choices in bailing themselves out. Essentially, this is why the 1% or the billionaires over the past year have made $700 billion this year, while poverty and homelessness has jumped up about 17% over the past year. Being said, economic fallout from Trump mass deportation could eclipse Great Recession is a headline news article that came out by The Hill. Now, this is important because, again, I talked about them planting seeds. You have a bunch of CEOs have been selling off shares, doing stock splits on their company to essentially preserve the wealth of their company as they are preparing for this. They've been preparing for this for a couple years now, as we thought this was going to occur back in 2022, and it should have. But what we're seeing is they've essentially, again, faked data. They've been injecting trillions of dollars at this point, or maybe not trillion, but close to a couple trillion. Well, they have injected a couple trillion into the market to keep it propped up. And so they're not allowing the market to go down until there is a transition of power. And now, again, they're planting seeds that there's this mass deportation is what's going to occur. And if that is true, the problem with that being is that all these illegals that have come in, they aren't getting paid minimum wage. So what they're doing is they're undercutting the Americans' wages and bringing in cheap labor to keep this market sustained, and understand what that means. That is what ultimately what's going on. So again, transparency is extremely important when you're talking about these particular subjects. But the problem is they didn't just let people into work. They just ultimately just let everybody in. And that was the problem. So again, these are the things that they are setting up to leading into massive issues going into the new year. Now, the China central banks have ejected 19.3 billion in yuan in the 7-day repos, and this is something I've talked about. We're doing the same thing, maybe not as much as they are, but they are doing everything that they can to stop the hemorrhaging that is currently going on. They've cut rates. They've been injecting billions of dollars in, and nothing is happening. They can't gain traction, and that is a huge problem. Is you can only print your way out so many times. Essentially, this is kind of why crypto was developed, to try to fix this problem. This is why you're getting all these countries developing these massive Bitcoin reserves. Because of this problem, is because essentially the dollar is not going to be sustainable. Now, there's a threat of the BRICS, but you need to understand the U.S. stock market is the biggest by far in the world, and that is based off of the dollar. Now, you have a lot of foreign investors that aren't just going to let that go, because essentially they make billions and trillions of dollars off the markets alone. So they're not going to let that completely crumble. So you have to understand that the dollar just isn't going away. They'll convert it, whether it's CBDC, whatever the case is. But again, ultimately understand that the U.S. still has a lot of power that people just don't understand when it comes to investments and multiple people being able to leverage their money. So that is what we need to keep in mind. Now, Chinese government hackers breach Treasury Department economic sanctions. Again, all of a sudden, there is way too many coincidences happening between the election and the transition to the new power. Why are we all of a sudden just getting hacked left and right? Why is there all these occurrences that are going on right between just before we leave? Again, we've been dishing out billions of dollars in packages. Within 2 days, we sent $6 billion to Ukraine. Again, they are emptying the piggy bank right before the new administration can come in and start making changes. So now they got to jump through all these hurdles before they can actually make legitimate changes that were actually going to fix things that are going to actually matter and be sustainable. And now, again, still going to meet a lot of resistance trying to push through policy, but ultimately they're trying to delay everything from happening moving forward. Also, on top of that, so not only do you have these hacking breaches, you have all these other issues with bonds. Again, you have all this mass deportation because, again, undermining wages of the average American worker. You have now the U.S. said it was losing control of the bird flu. Why exactly does this matter? The line above here, what I have here, Myrna was awarded $175 million to produce a bird flu back in July of 2024. They were already foreseeing this happening, and so now they're actually mandating masks in a bunch of states. And then now, with the mandate that just occurred, these two here, this U.S. losing control of bird flu and this mask mandate all started this week. And then you also had China with this breakout of the HMPV TV come out as well. And so now you are looking at potentially lockdowns. We cannot survive another lockdown. Our economy, we've seen what it's done. And even if if it was to occur, you're not going to get quite as big of a crash as perhaps we did a couple of years ago, because it was kind of really out of left field. So now the market is more adjusted to that. It still would sell off, but maybe not as bad as it did in a couple of years ago, because it wasn't very much foreseen. So with all that being said, again, you have all these things setting up, and then on top of all this bird flu and money laundering and all these things that are going on, you had terrorist attacks happen this past week. And our hearts go out to those people in Louisiana and New Orleans. Ultimately understand that with that going on, you also had the Cybertruck exploding in front of Trump Tower in Nevada, right? You have these things going on. You have a bunch of seeds that are being planted before President Trump actually gets in. So this is what I'm trying to say. I'm neutral on parties. I'm not trying to sit here and talk about details or talk, because that's what they want you to do. They want you to fight between yourselves, right? Ultimately understand what we're trying to do here is pull that apart and see what implications these have on the actual market. And that's what matters, is you have all these events that are occurring. So you've been lied to, or all your money has been taken from you. Again, inflation is still high. That's one thing I don't have on here, but it's going to be important because not only do we have major banks reporting on a Wednesday, you're going to have core inflation on that Wednesday, on the 15th as well. And it's already rising despite the 100 bips that we've already taken off the rates. You have to understand that inflation has never gone away. So again, another report that's been adjusted. It's been essentially diluted into multiple reports to try to make it not look as bad. But inflation has never really gone completely down back to the 2% like they're claiming that it was. But again, they were trying to get your vote. So what they do is they adjust data, they filter data, they don't allow data to be reported, so that way they can essentially, again, create a utopic view. Because in general, there is the fact that you don't want the general masses to know really what's going on, because again, if there's any panic, you can't control people. People are wildly out of control if there isn't some narrative and understanding to that. But again, there's a lot of other things, a lot of bureaucracy that's going on that we just don't want to get into here. But again, you have to understand these headline news and what it again applies and how it applies to the market. So you have to understand that there is an event, and I talked about this. What I'm looking for into this new year is I'm expecting quantitative easing and a Bitcoin reserve. And so to be able to do both of those, you need an event to occur. Now, whether that is done through the up and coming administration or the current administration, all we know is that the current administration is leaving a debt bomb for that to go off, to cast blame. Again, it's because it's the stupid game between the parties that they were going to cast blame, that it's because you voted this person in, this is going to happen, when it's existed for the past 2 years and they've prolonged it, which is something they are very good at doing and something they've been doing heavily over the past decade, is what you need to keep in mind. So again, we have a lot of things that are occurring over this past year. And that is what is, again, largely concerning moving forward. So this upcoming week, we also do have some big things. Again, this week into the 15th. So we got about a week and a half. I think we're actually going to get into a bull rally. This will be your Christmas rally, I do believe, until we actually start reporting. Then I think it's going to be a very different story. At that point, I think you're going to, like I've showed just in the headline news, there's a lot of potential things. Again, your bank term funding program is ran out of money, right? You got $4 billion, isn't going to last very long. So you can cover your Big 10 banks, but the problem again being is your regional banks are going to be in trouble. And so once the new president comes in, inaugurated in on the 20th, then at that point, it's fair game for regional banks to start getting hit, and you're going to see a lot. If we've already bailed out 1,000, imagine how many more banks out there are going to be going underwater under this current administration. They can't bail them out because they sent billions upon billions. The $6 billion I just talked about, there's been other packages, multi-billion-dollar packages going out to Ukraine essentially since the election. So they're again draining the piggy bank to when we get to that point that again your hands are tied and there's nothing you can do but watch everything crumble before your eyes. So that is a huge problem, huge concern. So this upcoming week, we do have some scheduled events. We do have the FOMC meeting notes. So talks about the last 25-point basis move that we did cut. I'll give us more insight into what we could potentially see in the new year. Again, projections at this point really don't matter because there's a lot of events that are coming up, and inflation is largely the concern. And so again, those meeting notes aren't really going to have a big impact. There will be no Powell not until we have an actual rate decision, which will become later in January as well. So that's one thing we do need to keep in mind as well. And then Thursday, we have the market will be closed in honor of the Jimmy Carter's passing. And then on Friday, we will have non-farms. So that is one big event. Again, you're going to need to watch and see if they start offloading that. It may be too soon for that to happen. We may not see those numbers till the revision, but we'll have official numbers coming out that stated that there was over 1 million jobs, almost 2 million jobs that didn't exist between 2023 and 2024. But to try to get your vote, that has changed. Now, it's not just this administration. It's happened before, but at this scale, it is largely concerning. And now you have a lot more eyes on everything that's currently going on. So again, a lot of these things that have been maybe perhaps done in the past at a smaller scale is now being exposed at this point. So upcoming events, the next monetary policy is at the end of the month. So not only are we going to get essentially the Super Bowl week, that's something also I haven't really hinted on. I've talked about this, but the Super Bowl week, this earnings cycle will be the last week of January. We will have monetary policy. That means we will get Powell on January 29th. So again, we have a big month. So this is your 1 week where you kind of get to catch your breath before you're going to get onslaughted with tons of information and perhaps tons of events. And since the assassination attempt, you have to understand that we have major events occurring almost every weekend since that time, and I'm not expecting that to slow down. At least for over the next quarter, I expect a lot to occur. So just keep that in mind and be on your toes. Again, we are getting into a cycle where we typically sell off in February, March anyway. So that is something you need to keep in mind. The next core inflation report is on the 15th. So not only do you have big banks reporting on the 15th, you will have a core inflation report. And if we come over 4%, you're going to start bringing in a lot of fear. And when I talk about if you want to gain fear to gain for the market to start crashing, if you have a continued onslaught of bad information. So if we get bad bank earnings and then you get bad core inflation in the middle of the week, that's going to start selling off. And the more you add on to it, and we also got big bank earnings on Thursday, right after that Wednesday. So on the 16th of January, you will have more big bank earnings. So if you get bad bank earnings, bad core, that starts selling off the market. Then you get more bad bank earnings. And then you got Friday as well. That's got to address that. So you got 3 days in a row where the market will be open, where we can continue just to massively sell. It is, again, largely concerning. And this is our earnings schedule. Is on the 15th. You got JP Morgan, Citibank, Wells Fargo, BlackRock is also on here, but I don't have it listed. Goldman Sachs, PNC reporting on Wednesday with core inflation. Then on Thursday, you got Bank of America, Morgan Stanley, and U.S. Brand Corp as well. So you got some major events. So again, this is your breather week, even though you still have non-farms coming out, and whatever event may potentially occur over the weekend. And then you're rolling into just this full-blown banks, which I am going to pull up I have this new site too, Earnings Hub. So shout out to them. But I want to pull this up to kind of show you what's going on, because you're really going to want to look at this. And this is what I've been talking about, strategically placing earnings with all these events and how it can cascade. Again, if you want a crash to occur or a major pullback in the market to, again, feed a Bitcoin reserve or provide quantitative easing, you need multiple cascading events that continue to drive fear, and then people pull out of positions, and they all start doing bank runs and all these things. So again, you need that momentum to really get that going. And so again, it's setting up for that, and that's what I'm trying to make you aware is it's very much setting up for that particular situation on whatever event, and then they can cast blame on because it was Trump or whatever the case is. But we know that it's already a bad system. Again, the debt-based system is a bad system nonetheless. But so this week, again, SPX is a little bit higher than normal at 83 points this week. Tesla's at 27, so I think it came down like a point, but Tesla has had a lot of momentum lately, and I keep reiterating the humanoid thing is starting to pick up, starting to get traction. The quantum computing thing, I think, is a very temporary thing. Again, it's just a breakthrough. That one chip isn't going to do anything right now. You still got years before quantum computing really has any really kind of significance, but it did have a little bit of momentum, but I think that's going to shift over to humanoids. So Tesla, again, publicly traded company that will show you a lot of that, and again, they have the means to do that very easily. Boeing's at a normal 6-point move. JP Morgan is a little bit higher than normal at 5. Now, again, you have to understand JP Morgan sits around 4, and it doesn't really tick up or down too much. So again, the one tick may just be because we have non-farms. And again, I expect those numbers to kind of hit on par. And then again, I think revisions later on are really going to show you again the true story. So now let's move into the Earnings Hub. Again, this is a great site. I have no affiliation or anything with this site, but ultimately, again, it's a great site I found. I wanted to use it for now. I do like Earnings Whispers weekly JPEG that they put out every week. So I will be going back to that once we start getting closer. But this kind of gives you an idea what's going on. So the 15th of January, again, I just went over all the banks that are going on. You have a lot of banks. Actually, you have TSMC as well on the 13th, so that will be big. UNH will be big as well. So you have all these big earnings going around. You do have core inflation coming out here as well. And on Friday, I didn't even know this. I don't know how accurate this is. This SMCI they have it on a couple different things, but you do have some other additional banks reporting on Friday. So again, if banks continue to sell off, you have to understand the limit rule as well. So if during the day, if some index or individual stock is selling off more than 7%, they will halt the stock or index for 30 minutes. Then they'll put it back online. If they have to halt it again, they'll halt it. And then the third time, if it's halted again, if it moves again greater than 7%, they will just shut down the market for the rest of the day. So that is something you need to keep in mind. So again, this is your one breather week before things start getting crazy. Now, what's interesting is we moved into the next week. This next week, obviously, you have an inauguration on Monday. So there is nothing reported there. The one big earnings we're really kind of looking at here is Netflix subscriber count. I always talked about this when it comes around. It kind of gives you an insight into where the consumer is at. If Netflix has a large amount of subscribers, again, that typically means that people are looking for cheap forms of entertainment because things are just in a bad state, and they've pretty much almost doubled their subscriber, quadrupled their subscriber count over the past year, really, because people just don't have excess money. And we're seeing that reflected also in Walmart as people are splurging on groceries. So these are some things you need to keep in mind. So, but there isn't very many big earnings on this. We do have a lot of bank earnings, as you continue to see. Again, that $4 billion isn't going to exist very long in this current market in this first quarter. So you will start seeing banks being reported. I won't be surprised, again, if you start seeing lots of bank failures as we continue to go through this earnings cycle. So you have to keep that in mind. Again, a lot of people, 90-day delinquencies on credit cards, automobiles, and also commercial real estate is also heavily. That's the whole set. Those whole three sectors are skyrocketing on 90-day delinquencies. So a lot of things are becoming insolvent, which ultimately makes banks insolvent. And you're going to see that, and that 4.4 billion isn't going to cut it going into this next quarter. So that's what you need to understand and take away from that. So Visa, I'm sure, will do well. You got Texas Instruments will be a good one. Discover, another credit card. Lam Research is good for chips, so you need to pay attention to that. But so not a lot of big earnings this week, but because you have that big event on Monday, obviously with what's going on with inauguration. Now, earnings week. This is something I really wanted to point out, and I've talked about this, how they strategically place this Super Bowl week. When you talk about the Super Bowl week of earnings, typically it was like this before SVB went down. When that bank went down, we started having bank runs. They diluted this week and pulled a lot of them out, because what happens when I talk about cascading fear is how you can really get a market to sell off. They've essentially pulled a lot of these, like Tesla and essentially Netflix were reported 2 weeks out, and then Apple, Amazon, and Microsoft really weren't reporting on the same week. They'd kind of separate those into 2 different weeks. Again, because what happens is if you have a big week like this where you got Microsoft, Google, Amazon, Meta, um, some of these other ones like Tesla, IBM, um, all reporting during the same week. If some of those do bad, the market will gap down overnight. And again, you will continue to feel fear if all these start missing expectations. And so expectations have been risen on some of these companies. If by chance they miss expectations, these companies will start heavily selling off, and that will be a huge problem. And another thing that we haven't really talked about is you have all these lists. You have the Epstein list, the Diddy list, that are all supposed to come out on the 20th, or roughly as soon as President Trump takes office, to expose people. A lot of these people, you have to understand, a lot of this stuff is in sync. Even though you don't want to talk about it, it's not really related to the market. It will have an impact on the market, because all these foreign interests and all these people of power are all invested in these companies. And so you have to understand the implications of what's actually going on here and what could potentially play out right now. Again, it's all related back to the market and how it could affect the market, right? And the people involved, the CEOs involved, right? Like if a company loses a CEO, if he's a good CEO and he loses for whatever reason, right, that can have a big impact on a company. And if it's one of the Mag 7 and the company starts going down, that can have an impact on the general market sentiment. So, right, so you need to understand how all this plays into it. But again, you have massive companies all reporting in this week. So if you get bad bank earnings for that first week, and then you go into the second week, you get inauguration, you have some major event occur, maybe some bad earnings, and then you come into this week and maybe you get, UPS isn't going to do well. Maybe potentially Microsoft isn't going to do well. Starbucks isn't going to do well. Maybe Tesla isn't going to report so hot. IBM maybe not so good either. And then you also look at Apple. Maybe Apple and Amazon aren't going to do so well. Again, a lot of that money is shifted into Walmart, and Walmart typically doesn't do well unless the economic environment is bad. And so that's what you need to keep in mind. So again, a lot of news. So you're going to have to be prepared for what's about ready to come, because things are going to be wildly out of control over the next couple months or the next couple weeks. So just be prepared for that. Be calm. You can, take advantage of this week. I believe we can rally this week before we actually report earnings on that Wednesday. Again, the market may start dipping after this week. It may rally this week, which it typically does just before going into earnings. And then it may start diving down a little bit next week, or the following week, because you got core inflation, which will be very, very important. There'll be a lot of weight on this inflation, because that's largely a concern again. And then again, if inflation starts to rise, that means your large tech companies are going to start selling off heavily again, which also means Bitcoin will start pulling back. So these are things you need to keep in mind moving forward. So, but with all that being said, again, if you have made it this far, go ahead and drop a like, and we will see you on the next one.